Next, we will go over who are eligible dependents that could be enrolled on a county medical, dental, or vision plan with you. Eligible dependents are your legal spouse, registered domestic partner, natural, step, adopted, legal guardianship children, and children of a domestic partner. Any child that the county received a qualified medical child support order from a county Department of Child Support Services will be automatically enrolled as well. Children are no longer eligible the month following his or her 26th birthday. For disabled children, a disability verification process will occur for any employee requesting to keep the child on their plan beyond the age of 26. In order to enroll a dependent, you must provide the required documentation within 60 days of your date of hire or benefits eligibility change. For any dependent, his or her Social Security number or individual tax ID is required. For a spouse, a marriage certificate is required. For a domestic partner, a certificate of registered domestic partnership is required. For children, the birth certificate is required. All dependent documentation is required before your enrollment form can be processed. If you miss the 60-day window for new hire enrollment, a qualifying life event is another opportunity to enroll. If any of the events listed on this slide occur, you have 60 days from the date of event to submit an enrollment form, the required dependent documents, and proof of the qualifying life event. These changes are made on a go-forward basis. The only exception to this is the birth of a child, where benefit coverage is retroactive to the first coverage period following the child's date of birth. County-paid basic life insurance is provided to full-time employees based on their years of service. This benefit is automatically added when you reach each new tier of years of service. The basic life insurance is provided by Voya. Full-time employees are eligible to purchase up to $200,000 of additional life insurance in increments of $25,000. If you enroll within 30 days of your date of hire, you can enroll in up to $100,000 with a guaranteed issue. This means that the evidence of coverage medical questionnaire is not required. Employees in certain bargaining units as listed on this slide receive county-paid supplemental life insurance based on their respective memorandum of understanding. The life insurance policies you hold while employed are portable and convertible upon separation of employment. This means you have the opportunity to keep the life insurance, but you would pay the vendor directly. The county's life insurance plans sponsored by Voya do not offer spouse or child coverage, but they can be listed as beneficiaries. Please ensure you keep your beneficiary information up to date. There are additional voluntary insurance products available to employees through the county's vendors, Schmente & Associates and American Fidelity. The premiums for these elections are deducted on your paycheck through payroll. For more information on enrollment, please call Schmente & Associates at 877-733-1670 or American Fidelity at 800-450-3506, extension 8661. State Disability Insurance is a program provided by EDD, the Employment Development Department. It is not a program that an employee can opt out of. It is an automatic deduction from your paycheck, but it provides wage replacement in the event that you are unable to work due to a non-work-related illness, injury, pregnancy, baby bonding, or to care for a seriously ill family member. Almost all county employees are automatically enrolled in this program, except for safety employees, department heads, and elected officials. The Employee Assistance Program through MHN is available to all employees and members of their household. It assists with personal problems and/or work-related problems that may impact your job performance, health, mental, and emotional well-being. It is provided to you and the members of your household at no cost to you, as it is a county-paid benefit. MHN provides 5 counseling visits free of charge per incident. It also can help with financial planning and estate services such as the creation of a trust or will. It is completely confidential. Section 125 is part of the IRS code that allows employees to convert a portion of their taxable wages into non-taxable benefits. By electing medical, dental, and/or vision, you are automatically benefiting from the Section 125 benefit, as your premium deductions are taken out of your paycheck on a pre-tax basis. However, there are two additional ways to lower your taxable income through the Section 125 benefit: through the Dependent Care Account or the Health Flexible Spending Account. These are not required, but optional benefits for you if interested. Let's take a closer look at both of these plans. Dependent Care Account can be used to collect reimbursements for eligible child care expenses such as daycare and after-school programs. Eligible dependents are children up to the age of 13 or elderly dependents incapable of self-care. A participant can pre-tax up to $5,000 of their income each plan year. These funds are deposited into an account in your name as the contributions are deducted from your paycheck. The only time you could change what you've elected mid-year is if you have a qualifying life event, such as a birth or marriage. So please choose your elected amount carefully, as any unclaimed balance at the end of the plan year will be forfeited. The other Section 125 option is the Health Flexible Spending Account. For 2021, participants can contribute up to $2,750 of pre-tax money into an account managed by American Fidelity. This money could be used to pay for eligible medical, dental, vision, and prescription expenses using a debit card provided by American Fidelity. Examples would be co-payments, deductibles, prescriptions, some over-the-counter drugs, etc. The amount you elect is front-loaded to you at the beginning of the plan year. You could carry over up to $550 of unused funds into the next plan year, even if you do not enroll again. These funds are available to you as long as you are an eligible employee at the county. Anything above $550 is forfeited, so you'll want to be sure to elect the amount most appropriate for you and your family. Please be aware that if you are enrolled in a high-deductible health plan with a health savings account, you cannot participate in the Section 125 flexible spending account. I know it is odd to discuss possible separation from employment on your first day of employment. However, we are required to discuss Cobra benefits with employees. Cobra is a federal program that was instituted to bridge the gap between benefits from one employer to the next, or between a group health plan and a retirement or individual plan. Cobra is an acronym for Consolidated Omnibus Budget Reconciliation Act. If you leave employment, your health benefits will end. However, this provides a way to continue those benefits. However, you pay the full cost, no employer contribution.